Hi, this is Elliot Eisenberg of Graphs and Laughs here to catch you up to date on the latest in residential sales data for the month of November. In November, in Hillsborough County, single-family home prices slid 1.4%. That was the best performance across all three counties in both types of properties. Single-fam prices and multifamily prices are declining across the board. Multifamily prices, that's prices for townhomes and condominiums, slid a more substantial 14.9%. Sales activity on the single-family side slid 1.1%, and on the multifamily side slid more, 12.6%. Sales price as a percentage of list price also deteriorated. On the single family side, it's now 95.8. That's the highest percentage across all three counties in both types of properties. On the multifamily side, it's now 94.2%. Pending sales activity also slid across the board, but only 4.8% in Hillsborough County. That was the smallest decline across all three counties in both types of properties. Multifamily pending sales activity slid 16.3%. In terms of inventory, or most importantly, months of inventory, it continues to rise. It's now at 3.7 months for single family units, and for townhome and condominiums, it's 5.4. Clearly, the market here is softening, with multifamily softening more quickly than single family. In Pasco County, single-family home prices slid 2.6%. They slid slightly more, 2.8% for townhomes and condominiums. That was the slightest price decline across all three counties for multi-family properties. Sales activity declined 14.3% for single-family units and roughly double, 32.4% for multi-family units. Sales price as a percentage of list price continued to decline as well. It's now down to 95.4% for single-family sales and 94.3% for multi. That was the strongest, the highest sales price to list price for multi-family units across all three counties. Pending sales activity also continued to weaken. It fell 12.3% year over year for single family, and for townhome and condominiums, a stronger 36.2%. Lastly, inventory continues to rise here like it does elsewhere. It's 3.6 months for single family. That's the lowest single family inventory number across all three counties, and also for multifamily. And for multifamily, it's at 4.7 months of inventory. That's the lowest multifamily number across all three counties. Here too, as in elsewhere in the area, the housing market continues to weaken slowly, with multifamily weakening a little more quickly. In Pinellas County, single-family home prices slid 7.4%. They slid 10.7% for townhomes and condominiums. In terms of sales activity, on the single-fam side in Hillsborough County, it went up 5.4%. It was the only positive increase across all three counties and both types of properties. Multi-fam sales activity declined a slight 4.5%. Sales price as a percentage of list price declined for both single and multi-family units. It's down to 93.7 for single family units and a very weak 91.5 for multi-family units. Pending sales activity also declined. It fell 8.5% for single family, but just 5.8% for multi-family units. That was the smallest decline for multi-family units across all three counties. Inventory in months of inventory continued to rise here like elsewhere. It's now 3.9 on the single family side and a very large 8.3% for townhomes and condominiums. The housing market here, as in other counties, is weakening, with the multifamily sector weakening a little bit more quickly. Turning our attention to the national economy, in the third quarter of 2025, data is still coming out because of the government closure. It looks really good. Looks to be well above 3%. The fourth quarter of 25 and the first quarter of 26, I suspect will be lower for a bunch of different reasons, but still pretty good at above 2%. The big problem that the economy faces right now, or that the Federal Reserve faces, is it's facing a simultaneous problem of rising unemployment and relatively high but stable inflation. The Fed wants inflation at 2%, it's closer to 2.6, so it's above the Fed target while the unemployment rate rises. And the Fed can't decide which of these issues, or is struggling to decide which of these two issues is more important. We know from behavior the Fed cut rates 3 times in Q4 of 24, and they cut rates 3 times in Q4 of 2025. So clearly they believe that the unemployment rate is much more important than the inflation rate, because the inflation rate's not going up all that much and is now reasonably stable. If the inflation rate remains roughly where it is at 2.6, 2.7%, and unemployment is where it is at 4.6, or continues to rise, the Fed will continue to cut rates. As a result, I expect the Fed to cut rates in Q1 by at least once, by a quarter point. Maybe they'll cut twice. We'll see what happens and how things go. In terms of mortgage rates, they've been really range-bound for a very long time. And unless we see the economy weaken and GDP growth weaken substantially, no evidence of that, or inflation expectations about future inflation numbers really coming down, no evidence of that either, I suspect that mortgage rates really remain where they are in the low 6% area. In terms of a recession, the recession likelihoods are elevated because of the importance of artificial intelligence, and will that continue? That said, they're about 30-35%, not that bad. Really not at all. If we now turn our attention to the national housing market, it continues to really struggle. Year over year in November, sales slid 1%, essentially flat, and we're facing a combination of not enough houses, too high home prices, and relatively high interest rates, making housing quite unaffordable for many Americans. And many Americans who can afford it, who have a low mortgage, don't want to move to a new higher priced house because they'll have a higher mortgage payment. So I don't see a lot changing. What we're really short of right now is housing nationally. We've been underbuilding for almost 20 years, since the housing bust of 08-09, and we're now 2, 3, 4 million units short. That's the fundamental problem. If we look at the Florida economy, it continues to do quite well. Unemployment in Florida remains well below the national average, albeit it's growing as well. And people continue to move to Florida, albeit at lower rates than they did in the past. In terms of the Florida housing market, what can we say? We know it's clearly weakening. And it's important to note that it's not just weakening in Tampa. It's weakening in Miami, it's weakening in Jacksonville, it's weakening in Orlando. Different speeds in different places, but they're all becoming increasingly buyers' markets. That's the most important thing to point out. And if you look at by any different measure of housing market strength, whether it's average sale price, sales, pending sales, a sale price as a percentage of list price, months of inventory, the rubrics continue to deteriorate across the board. Now, this is not entirely bad. What we really need to see is increased housing affordability. And if we get that through hopefully a little bit lower rates, declining home prices, this would boost sales and increase affordability and be good for the housing market nationally, and here in Florida and here in Tampa.